Yeah, so today we are backtesting. We'll be backtesting XAUUSD using RSI divergences, targeting a net reward, a risk to reward ratio of 5R using RSI divergence and engulfing candles. And just for context, a disclaimer: I did not use any. How many hours are this? 2, 3. So I did not use any multi-time frame analysis, no checking trend, no, like it was just raw engulfing candles, raw RSI divergences in the 1 minute time frame. So for today we are backtesting last week's price action, and for last week's price action I'm talking about the week that began on 29th of June, I mean, ending on Saturday, or on Friday, I mean, ending on Friday, which is 3rd of July 2026. So that is what we are backtesting today. Let me use this. Yeah, so as you can see, we had the day opening here, the week, I mean, opening here Monday at midnight, right here, this blue line, that is where I've marked. And then coming, was it the 5 minute or the 1 minute? Let me check. I think it was the 5. Let me check if it was the 5 minute. Yeah, it was the 5 minute time frame. Yes, so 5 minute time frame. Last week's price action review for XAUUSD using RSI divergences and engulfing candles. In this one, I've not used any bias checking. I've not used multi-time frame analysis. It is just raw engulfing candles and RSI divergence. I mean, raw RSI divergences and engulfing candles, and that is what we are going to check today. Let me check if the brightness is okay. We're good. Nice. So the first setup was here, and you can see the engulfing candle closes here. This was the divergence from here up to here, and RSI is doing the opposite. You can see that was the divergence, targeting a net risk to reward ratio, fixed risk to reward ratio 5R. You can see this one gets to stop loss. So this becomes -1. Let me call this -1. So instead of using break even, because I usually use break even when price moves to around up to 1 to 1 risk to reward ratio, then you move it to break even. But let's use a -1 there as a direct loss. And then the next trade setup, I think also I will be counting the trades we are taking. So this one is the first trade, which is a loss, and so as a result we have -1 there. Then I will anchor this specific text so that it follows us. So the next setup we have is here, and this is an RSI divergence as well. You can see on the RSI we have RSI doing the opposite of what price is doing, and then we have an engulfing candle there, stop loss below the engulfing, and hue targeting 5R. And you can see this gets to 5R, and this becomes the second trade. So second trade is a win, and we have +5, sorry, +5. And then the next trade occurs here. You can see divergence on the RSI as such, and you can see that price is doing that, and this is an engulfing candle, and then this becomes a straight up loss like that. Can be a break even or a loss like that. And as that was happening, you had price also giving us another setup. So this is a loss. Third trade, it was a loss, -1. And then the fourth trade, let me show you where the divergence is happening. from here up to here, and then you can see this was the divergence, and price gives us a 5R, and this becomes a win. So fourth trade, this becomes a win and plus 5. So let's see the next. Where we had the next setup is here, right here. You can see price giving us lower lows, and RSI is giving us the opposite, which is higher lows, like that. And then here here is where here is where we have an engulfing candle, and this engulfing candle frames our entry, stop loss below, and giving us 5R, but you can see this one gives us a stop loss, and that becomes the fifth trade. This becomes a loss and -1. So the next setup comes here. You can see price giving us lower lows, and RSI is giving us a lower highs, like that. So this is the engulfing candle right here. You get in, stop loss below the engulfing candle, and target 5R. You get 5R, and this becomes the sixth trade of the week. Sixth trade, and becomes a win plus 5. So that is the setup. And then now we'll go to the next one. Let's see where I have the next. As long as there's no divergence, there's no trade, or if there's no engulfing candle, there's no trade. So that is the basic rule. So this was news. Price moved up, and then price gives us this divergence here and here, and here price has been ranging, and then it stops us out, and this becomes the seventh trade of the week. Which is a loss and -1. Yeah, so it's like that. So then the next one is here. This is a short range divergence. It may not be noticeable, but it is there. You can see here. Let me use the line chart. This is price giving us higher highs, RSI is giving us higher lows, like this, and you can see that is the divergence. Engulfing candle, get in, target 5R, but you can see price doesn't quite get there. So this is a trade I would count as a break even now. So because as the week was closing, it was not in a loss, it was not in a profit, it was in a tiny profit. So let's count this as a break even or a zero trade, which will become the 8th trade of the week as a break even trade. So I'll not count it because it is a zero. And now let us now count the wins, the losses, and the wins were how many of these? 1, 2, 3 of them. And losses, how many are they? This is 1, 2, 3, 4. So these are a total of how many trades? 7 trades. 7 trades. So you can see the win rate for this strategy is around, let's see, where is the calculator? 3 divided by 4, 3 divided by 8, 7. 3 divided by 7 is equals to 40, 0.42, so that becomes 42.8. so let's say it's 43% win rate. So 43 percent win rate. Let us assume you are trading a personal account of $1,000 and a pro forma account of $25,000. How would have these trades panned out during this week? So we want to see whether it would have been a profitable week trading this on a personal account of $1,000 and a pro forma account of $25,000. So on these two accounts, you are risking 1% per trade and targeting 5% because our risk reward ratio is 5RR. Okay. Yeah. So the first trade was a win. Was a loss, I mean. So the first trade was a loss, and that means our $10,000 So our $1,000 account moves down to 990, and our $25,000 account, let's use $10,000 account for easy mathematics. $10,000 account risking 1% of 10,000, that means this account moves down to 9,900 if I'm not wrong. Yeah, so 9,900. And then the second trade was a win, giving us a 5% increase. That means our personal account moves up to 1040, that is 990 plus $50. And then yeah, and then our pro forma account moves up to 9,900 plus 500, that is 10,400. And then the third trade was a loss, and that becomes minus 1%. That means that our personal account moves down to 1030, and our pro forma account moves down to 10,300. And then fourth trade was a win. Was it a win? Yes, that was plus 5%. That means our personal account moves up to 1080. I mean, that is 1030 plus $50, that is 1080. And then our pro forma account moves up to 10,800. So the fifth trade was a loss, that is minus 1%. 1% from our personal account moves down to 1070, and our pro forma account moves down to 10,700. And then the sixth trade was a win, which gives us a plus 5% increase. So this means that our pro forma account, our personal account, moves up to 1120, that is 1070 plus $50. And then this pro forma account moves to 11,200. And then the seventh trade was a loss, and that becomes 1110 on the personal account, and it becomes 11,100 on the pro forma account. So if you are trading a pro forma account phase 1, this would have passed at this, targeting 8%, this would have passed on the fourth trade like this. So in the fourth trade is when you pass your pro forma account, but consider that you have things like spreads, you have things like commissions, so probably you would take a win at around the sixth trade, or passing phase 1 at around the sixth trade, or passing phase 2 at around the fourth trade, like that. And if it was a funded account, then that means that you would have a profit of this is $1,100 on top. Let's use $100 to cater for commissions and spreads. That means you have almost like $1,000 on top. Actually, let's use 1050 because that's a lot of commissions. So 1050 to cater for commissions and spreads, and this becomes a very good profit on a 10k account. This is like 10% on a 10k account. You can withdraw that, buy food, buy whatever. And then on the personal account, this is 1110. Let's assume it is 1100, considering commissions and spreads, and this is now becomes a profit of $100, and you can withdraw that to pay rent in East Africa. You can withdraw that to buy food, to pay school fees for a child, you know, yeah, something like that. So this is how these trades would have panned out on a personal account of $1,000 and a pro forma account of $10,000. So that is the backtesting results and the overall overview of how this will have panned out on a personal account, on these two accounts, I mean. Yeah, so with that, I want to say bye bye. Let's see you next week. Let's see what next week gives us.